Well, it's been a red fortnight for Australian shares. The market has fallen over 4% from its peak 2 weeks ago. But is this the bottom? Or are we about to continue lower? So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Wednesday the 5th of November 2025, and before I start, you do need to be aware that whatever I say is general advice only. It's been a pretty universal sell down across most asset markets for the past fortnight. We've seen selling in Bitcoin, which dipped below 100,000 US dollars overnight. We've seen selling in gold, which has also dipped below a pretty key level of 4,000 US dollars an ounce. We've seen selling in US shares. We've seen selling in European, Asian markets, and the Australian market has seen selling as well. The selling's been pretty universal. Just about every risk asset class, at least the financialized ones, they've all come off. But I would say that of note is that the Australian market has seen a little bit more selling than US shares. Now, there are many reasons for that, and I'm going to touch on them in this video. But I wouldn't say that it's just the Australian market that's come off. It seems that profit taking and nervousness has hit really all asset markets around the world. Why is that? Well, prices are extremely elevated. That's one of the main things that sort of triggered a bit of selling. Two, another thing, we've also reached the 2-year mark for the global bull rally. It really began in October, or at the end of October 2023, and obviously we've just ended October 2025. So it's a 2-year milestone, and that might cause a bit of revision of thinking. And then three, it's starting to look like we're getting to the end of the interest rate cuts. The interest rate cuts that have occurred in, pretty much every Western economy. So in the US, in Australia, in Europe, those interest rate cuts might be starting to come to an end. Finally, the US government shutdown, that's ongoing. It's about to become the longest shutdown they've ever had, and that's causing issues with flights over there. It's causing issues with food stamps. It's causing issues with a bunch of things, and maybe that's starting to weaken sentiment as well. The most important thing, though, is the rate cut scenario. It was rate cuts that really sort of, pushed the market up, and it might be rate cuts that bring the market down, or the lack of rate cuts. US markets are still pricing in a very high likelihood of another rate cut in December, but after that, they're not really pricing in many more. They're giving about a 50-50 chance to a rate cut in the first 6 months of next year. So basically, they're saying that the rates might be about to bottom, and that would be a bearish sign for markets. Indeed, in Australia, it's perhaps even worse. We might already be at the bottom of the Australian interest rate cycle. We might see interest rates rise at their next move. And it was that sort of change in interest rate perspective here in Australia that led to our outsized selling, that led to our initial drop. It came after Australian inflation for the third quarter came in stronger than expected, and rose a little bit from the second quarter. Part of that was due to some timing of things and certain rebates and sort of mechanical things. But there were certainly price gains in consumer prices, and that's caused the RBA at their meeting this week to basically say no cut at this meeting, and fair chance we're not going to cut in December either. If they don't cut in December, we're then looking to next year, and obviously it's hard to know what the economy is going to do between now and then, but another RBA rate cut is certainly not guaranteed this cycle. So after that stronger inflation read, after that RBA meeting, our market saw a bit of additional selling in addition to the selling around the world. The US, they're still believing in one more rate cut, but whether they get any more after that is the real question. And the fact that it looks like those rate cuts are going to run out soon is certainly causing some concern, certainly adding to the global market sell down. Finally, I want to touch on some reporting. So obviously the US company earnings reporting season is ongoing at the moment, and it's been a pretty good season. So far, about 80% of their companies have exceeded their earnings expectations. That's a little better than average. Ridiculously, about 75% of their companies beat their expectations every earnings season. This season is slightly better than average. I wouldn't say that the beat rate is particularly impressive, but they are seeing fairly impressive profit growth, and that's despite a pretty underwhelming US economy. So they're having a pretty good earnings season. Of concern, though, is that that earnings growth number is not keeping up with the share price growth number. And as a result, shares have gotten more and more and more expensive. And as those shares have gotten more expensive, you know, suddenly news that didn't matter beforehand is starting to be a little bit more concerning for the markets, especially the fact that we're running out of potential rate cuts. Here in Australia, though, we had our major earnings season in August. It wasn't very good. We're now having a sort of minor season with the bank reporting. We saw Westpac report earlier this week. The report was probably, I would say it was pretty poor. Let's be honest, it wasn't good. And I say that it wasn't good because earnings have declined. And that's despite, the share price rising about 30-something%. Now, bulls would say that, they had strong lending growth and that will translate to profits in future. But so far, and for the past 3 years, lending growth hasn't translated to profit growth for the banks. Whether or not they'll be able to translate that to profit growth is a real question. And if they can't generate increases in profits, they won't be able to generate the increase in dividends that Australian investors are looking for. We're going to see NAB report tomorrow. We're going to see Macquarie report on Friday. We're going to see ANZ report on Monday. Those 3 reports will be very big for the market. The market is looking for any sort of news at the moment to help it bounce from the current support levels. It's fallen off 4%, a little bit more. It's come back to a key support level. It's at the decision point where it's trying to decide if it's going to rebound from here or if it's going to break lower and start to head towards a technical correction. A break of this support level could indicate we're going to see a 10% fall from the peak, a 10% technical correction. So let's have a look at the charts for this week then, guys. And this is the Australian market I was just talking about, the XJO index. We've fallen off a bit over 4% from our all-time high a couple of weeks ago, and we've fallen back to the key level of 87.50. We reacted to that level today, we bounced off it at the lows, and we returned to the downtrend line. Our stochastic is also bottoming out in the oversold area. Like I said though, there's no guarantee that we're going to break higher. We probably need to see a strong report from NAB tomorrow, maybe some strength in US markets, and that could indicate that we're going to bounce back towards that 88.80 level. We'd have to break above 88.80 to start looking like heading towards 9,000 or the all-time high. If we can't get back to the all-time high, we could be setting a lower peak, and you could argue that we've just set a lower trough as well. So that could indicate we're about to see some further selling in the sort of more medium to longer term. If we do break the 87.50 though, that could be a sign, that will clearly be a lower low. That could be a sign that we're about to see a period of sustained downwards movement as well. But like I said, nothing will be confirmed until a clear break of that level happens. If we have a quick look at the US market for this week, and we can see that over the past week, US shares have also seen some selling. Not quite as much as the Australian market. And, I touched on the fact that the RBA is perhaps already at the bottom of their rate cuts, while the US is perhaps considering one more rate cut. But also, their earnings have been a lot better than ours, that's for sure. Regardless, they are looking a little bearish after reaching the upper bound of this ascending channel, maybe also some resistance at 6,900. Technically, we're now starting to look at, 1, the previous all-time high resistance, 67.50, and then 2, the longer-term uptrend, maybe even the 50-day moving average. Those are the 3 downside targets I'd be watching. If we see a break of that trend line and that 50-day moving average, that to me could be a sign that we're going to see some more selling. First target would be about 65.50 here. And then, if they then set a peak lower than that 6,900 all-time high, that's where we're going to see some selling in US markets. As I mentioned, we've seen global markets really sort of rally for the past 2 years. They started the global rebound in mid to late October 2023. It's been 2 years since that event happened. And what triggered that turnaround back there? It was a change in Federal Reserve policy. It was the Fed going from tightening interest rates to cutting interest rates. Now we're starting to see the other side of the coin. It's 2 years later, and the Fed is now starting to talk about the end of their cutting cycle. If anything is going to bring about a change in trend for this global 2-year-long bull run in all risk asset classes, for me, one of the factors could be a change in Fed policy, and that's what we're going to be looking at the Fed December meeting. So we'll wrap it up there for this week, guys. Will we bounce in the coming sessions, or are we about to see a technical correction? If you have any idea, let me know in the comments below. Otherwise, click like, click subscribe, and we'll see you next time.